we are continuing that question, illustration 52. So already we prepared ledger accounts. Now we can start the cash flow statement. It is for the year ended 31st March 2020. So you give the heading cash flow statement for the year ended 31st March 2020. Particulars in 2 amount columns. We will start with net profit as per statement of P&L. You have to take closing minus opening. So here it is given in the balance sheet. Net profit will come under which section of the balance sheet? It will be written under reserves and surplus. So just see the reserves and surplus. It is given there 2 lakhs and 1 lakh. So do you see, we have to take closing minus opening. That you do very carefully. Sometimes it can result in negative figure also. That means net loss would be the first or starting item. So here it is closing minus opening, that is 2 lakhs minus 1 lakh, which is 1 lakh, which you write in the inner column. Only the final figures we will be writing in the outer column. With that, certain items are to be added. For that, first what you have to do is just look into the accounts that we prepared. 2 accounts we have prepared. No, the first one is that building account. So look into that particular account. From this account, should we take anything there? Should we deduct anything? Should we add anything with that net profit? This purchase and sale value will be taken only under investing activities, whereas this loss on sale and depreciation we have to add back now, because these 2 reduces your profit and which we have to add back. If there was gain on sale, that you have to less. Then from this we already discussed this tax made, that is a provision for tax for the current year, 80,000, which we have to add back. So these 3 items we have to consider in this cash flow statement. So the first step is you write the net profit, then you look into the accounts that we prepared. So you will add depreciation, and then from that particular account we have loss on sale. From the next account we have provision for the tax for the current year. So take the figures from your accounts. Loss is 5,000. Then depreciation is 12,000. Loss and all, don't write it as minus negative figure, it is to be added. Okay, 5,000, 12,000, then provision for taxes 80,000. Now what you have to do is, so after you finish your ledger, you have to go through each and every item in the balance sheet and also adjustments. Okay, the first one, share capital. Where should we consider share capital? Only in financing activities. Then reserves and surplus we already considered. Long term borrowings also under financing, because financing activities means activities that affect share capital and borrowings. So these 2 will come under financing activities. But if that long term borrowings is given like 12% debentures or 12% bank loan, that 12% means it is the interest on debentures or interest on bank loan, which we will have to add back here. Understood? But here the interest is not given, so nothing to be done. Then it is given like short term borrowings. Their bank loan is given, but there is no rate of interest, so you don't have to do anything now. It will be taken later. Then trade payables, short term provisions. Okay, trade payables, where will you take? It will be taken under working capital changes. Then you have short term provisions against which we have not number. Whenever you see not number, you have to refer that not to accounts given below. So, here not to accounts is given like provision for tax, which we considered already. The current year's figure we considered. From where did we take the figure? From the ledger account. Then moving to asset section, we have fixed assets, 6 lakhs each we have for the opening and closing. Should we consider it now? No, that will be considered only in investing, because sale and purchase of fixed assets and non-current investments will be considered only in investing activities. Then we have intangible. Each and every item you have to go through, you have to see very carefully. Intangible assets like patents given, last year it was 50,000, this year the value became 45. The meaning is there is a reduction or decrease in the value of intangible assets. So, decrease in value of intangible assets meaning is it is amortization. So, amortization, what should we do? We have to add back. Understood? So, amortization we have to add back. The difference is 5,000. Suppose it was the reverse. Last year it was 45, this year it became 50. That means increase in value of intangible assets. Don't take it as amortization. If it is reduction, you can take as amortization. If it is increase, you take it as purchase of intangible asset, which you have to write under investing activity. Purchase and sale of fixed assets and non-current investments will be taken only in investing. Understood? So, this fixed assets will include tangible and intangible. So, if there is increase in intangible, you take it under investing, but if it is a decrease like this, you should take it as amortization. So, it should come here. Then non-current investments only in investing, then inventory, trade receivables, all these will be considered in working capital changes. Then cash and cash equivalents will be considering only towards the end. Okay, so these are the items given. So, now we can continue. So, now we referred each and every item in the balance sheet. We considered all these items. We got amortization from the balance sheet. Now, nothing to be deducted. So, what we can write now is, what we get now is operating profit before working capital changes. This figure also will be written in the inner column. So, operating profit before working capital changes, you can write that figure in the inner column. The amount is 2,62,000. Okay. Now, we will continue. We have to add decrease in current assets and increase in current liabilities as per the format we are doing. Okay, did we consider the adjustments? Sorry, we forgot to read the adjustments. So, after you finish the balance sheet items, just read the adjustments. We have proposed dividend for 2 years. Yes, that we had discussed in last video, that we have to consider this proposed dividend for the previous year 2 times we have to consider. First we will add back here, then we will consider under financing, because dividend paid is basically a financing activity. So, we have to add back here, then we will consider there also. Being an adjustment, it must be recorded twice. So, we forgot to add it here, you write it now. Proposed dividend, just go through adjustments also once you finish balance sheet items. Proposed dividend for the previous year, the last year's amount is 60,000. So, that we will add back. Okay, the amount is 2,62,000. Since I wrote it from the textbook, it is 2,62,000 itself. But if you do not write this particular item, your answer will not be 2,62,000. Okay. So, proposed dividend for the previous year we have to add back there. So, now we will continue, that is we have to add decrease in current assets and increase in current liabilities. So for that we'll refer current assets and current liabilities section. So current assets section or current liabilities, in whichever way you want you can do. If you are looking into current liabilities section, we have short term borrowings, bank loan, which we will not consider here, because bank loan, whether it is long term or short term, it is a financing activity. So that we will consider later. So you must remember one thing, you can write it there in your notebook. Current liabilities, when you refer, you should exclude bank overdraft, cash credit, and if you have any these kind of short term bank loans, that also you have to exclude. Okay. So from current liability section, exclude bank overdraft, cash credit, then short term provision if it is specifically mentioned as provision for tax. Why? Because provision for tax will be considered here. Current years we will add and tax paid we will less, under operating, not under financing. Understood? So under current liability section, we should less or we should exclude bank overdraft, cash credit, then short term provisions if it is specifically given as provision for tax. Just write like this in your notebook. If it is not provision for tax, you can take it under current liabilities. But bank overdraft, cash credit or short term bank loans, all these will you consider under current liabilities? No, you should not. You are supposed to take all these in financing activities only. Then creditors we can consider there is decrease in value. So we will write the add and less headings first. So you write add heading first, leave some space, then you write less. Less you can write the reverse. So one you have to study, the other thing you can write the reverse. Increase in current assets and decrease in current liabilities. Okay. So here creditors, there was a decrease in current liabilities. So decrease in current liabilities, where should we take? It is item to be deducted. So you write it here. Did you understand how we got a reduction? Because last year's figure it was 60,000. This year it became 45,000. Okay, so there is a reduction or decrease in creditors. So we will write that difference, 60 minus 45, 15,000 we will write within brackets, that is less item. Then you write it as negative figure, you write it within brackets, otherwise in a hurry when you are writing exam you will add up everything. So make sure you write negative answers within brackets. Then short term provision, already we discussed it. Short term provision can be considered under current liability? No, because it is having a not number which states that we have provision for tax which we already considered. Understood? And tax paid we will be considering towards the end of this first section. So don't consider it under current liabilities if it is provision for tax. So current liabilities over. Current assets, inventories we have, there is increase in current assets which we will write here itself. Increase in current assets we have to take here. So inventory we will take here, the amount or the difference is 5,000, that also to be deducted. Then we have trade receivables, that also increase in trade receivables. So again under less item. And the difference you can take, the difference is 75,000. Then next item is cash and cash equivalents, which we will consider only towards the end of the cash flow statement. So this portion is over, nothing to be added, but we have left some space there. No problem, let it be there, let it remain as blank space. You can continue your question. So now what we get will be written as cash generated from operations. Cash generated from operations. Now you can compute the answer. So the amount is 1,67,000. From that we should less something, just see your format, there is something like income tax paid. From where will you get this income tax paid? I already explained when we discussed this provision for tax. This paid figure of 50,000 will come here. So less income tax paid 50,000. Okay. So now we will get the final answer, which we can write in the outer column. The answer is 1,17,000. You just compute it whether you are getting the same figure. Since it is positive answer, you can write it as cash flow from operating activities. Cash flow from operating activities. The second section is above your first section, just write that first section heading, that is cash flow from. Here you can write cash flow from operating activities. Okay, before you write that net profit. Now we can continue. The second section is cash flow from investing activities. So what is investing activity? Activities that result in or related to purchase and sale of fixed assets and non-current investments. So which section we will refer now? The balance sheet fixed asset section you have to refer, and there is building in the fixed asset section. For building, what should we do? Since we have prepared ledger accounts, you should look into your ledger account, and from this what should we take? The purchase and the sale value you have to take. Purchase is 75, so we will write purchase of building 75,000, and which we will write as negative, because when you purchase building, what is moving out? The cash is moving out. Always think what is happening to your cash. Understood? Building is coming into the business, but don't think like that. We are considering the cash flow statement. You should think whether cash is moving out or cash is moving into the business. So it is cash outflow, and we have a sale also, which we will write like sale of building. That is 58,000, which is cash inflow, positive. Then it's not over. So again you have to look into your balance sheet. There is patents, which we already considered, amortization. Then there is one more item, non-current investments. Last year it was 0. This year it became 75,000. The meaning is they have purchased non-current investments. So that we will consider here, purchase of non-current investments. The amount is 75,000, which is cash outflow, because we are paying for the building. So it is cash outflow, write it as negative figure. So now you can find the final answer, like the final answer will be, if it is positive you can write as cash flow. Since it is negative amount here, minus 92,000, the final answers must come in the outer column. Okay, this will be written as cash used in investing activities. Now the third section is cash flow from financing activities. Cash flow from financing activities, that means that result in share capital, or that affects share capital and borrowings. So we will refer the share capital section and borrowing section. Share capital, there is last year 4 lakhs, this year the issue shares became 6 lakhs. So we can write issue of equity shares. How much you will write? 2 lakhs. The increase you can write here. Then reserves and surplus already we have considered, that's a net profit. Then long term borrowings, last year 2 lakhs, this year 1 lakh. Why? Because we are repaying. Understood? It's moving out, that's why there is a reduction. Reduction means we are repaying the amount. Repayment of long term borrowings, the repaid amount is 1 lakh, that is minus 1 lakh cash outflow. Then okay, so share capital and borrowing section we referred, but here we have a short term borrowings also. There is bank loan, short term bank loan, which we have to consider here in financing. So 10,000 was the amount earlier, now it became 0, means you are repaying short term borrowings. So that is repayment of short term borrowings. Repayment of short term borrowings, it is minus 10,000. Okay. So your share capital and borrowing section are over. Now we will go through adjustments. Dividend proposed is given, that we already added there under operating, which is an adjustment which we should take here also. So proposed dividend, actually dividend paid is financing, so that's why we are taking it here. Proposed dividend for previous year, the amount is 60, which is a negative because something which we are paying. Okay. Why we added it under operating? Because it is financing activity, it shouldn't reduce the operating profit. So there we added, that reduces the profit we added, and it is to be taken actually in financing. Here it is less because it's something which we are paying here. Okay. Yes. Then adjustments, other adjustments are related to building and tax, which we already considered. So always look into the balance sheet items, then go through adjustments also. Yes, so now that section is over, it will result in a positive figure, that is 30,000. Yes. So you can write, you can draw a line and extend to the outer column. You can write it like this. Here also you can extend the line to the outer column. Before you write the amounts in the outer column. Okay. So this will be cash flow from financing activities. Then we have fourth section, net increase or decrease. Oh, sorry, before you write this net increase or decrease, you have to add all three figures which we have written in the outer column. So here when you add all three figures, you are getting a positive amount like 55,000. So since it is positive amount, you can write it as net increase in cash and cash equivalents. Okay, net increase in cash and cash equivalents. Outer column you can write the figure, that is 55,000. Here onwards all figures will be written in the outer column. With that you add opening cash and cash equivalents. From where will you get the opening cash and cash equivalents? From your balance sheet. So opening figure is 30,000. So add these two, you are getting 85,000. Just see whether the answer is correct. You just look into the balance sheet, see the closing cash and cash equivalents, it is 85,000. That means your answer is correct. So for cash flow statements, you have a chance to check whether your answer is correct or not. Understood? You yourself can check whether the answer is correct or not. So if you get, when you add these two, the closing cash and cash equivalents, if you get same as in the textbook or as in the question, that means your answer is correct. So that is closing. If you follow this particular order, automatically you will get the correct answer. You will not miss out any item. Go through every item in the balance sheet, go through every item in the adjustment. That's the order. Okay. So, this is how you have to do a comprehensive question. Most probably you will have to do ledger accounts. So, start with ledger accounts, then you continue with the cash flow statement. Okay.